Good evening, everybody. This is Jeff Scott. This is May 21st, 2017. This is my top-down review. Sorry it's being done so late. I just got back from John Person's meeting in Vegas, and I was able to put my stuff together on the plane, but had to wait till I got home to actually to do the video and upload it. Just so you know, it's about 8:37. The futures are up a little bit, and it's not that they're up a little bit that is important to me. It's the fact that they're not down a lot. One thing about the weekend is, you get a North Korea missile test, you get some Comey talk, you get a lot of bad news. You kind of never know what to expect on Monday. Think about, was it last week, I think, when we had the issue around the ransomware over the weekend and how the market was going to be down big, and the market actually had an okay day. And if you owned anything like Proofpoint, FireEye, you had a pretty good day. So you never know what's going to happen. Even bad news doesn't always turn out negative for the market. But right now it's flat. It's up a little bit, not enough to make a difference. So we had something big happen on Wednesday. I was heading out to Vegas and watching my portfolio and making a few changes, and pretty much sat tight. And I got rewarded for that because as we know, Thursday and Friday were actually pretty strong days. And I did a little bit of de-risking on Friday afternoon. But was that just a flash crash, and are we continuing to go higher? Or is this the beginning of something worse? And I have to tell you, when I sat down to do my prep work this weekend, not to give away the punchline, I thought it was the beginning of something worse. And then I looked at my list of potential new longs and my potential shorts. I saw a lot more new longs, whatever that means. So maybe not the end yet. Disclaimer, as always, is for education purposes only. Anything recommended is the spirit of education, not investment advice. I'm a doctor, not a broker. I have an MD, but I don't have any professional licenses from the perspective of SEC, FTC, anything like that. So I'm not affiliated with any software vendor or trading company. I'm truly independent, and I'm not registered as an investment advisor. I use a lot of different tools. I've paid for all the tools. If I say something nice about somebody, it's because they deserve it, not because they pay me to say something. Trading involves risks. I do a lot of options trading in my own account, and I'm always reminded that I should mention the Option Industry Council and some of their documentation about the risk of trading options. And although I may mention options from time to time, they fit my portfolio. They may not fit yours, and you need to know what you're doing, because options can expire worthless, or you could wake up with a margin call because you didn't know what you were doing. As always, I call out my influences. Clearly, CanSlim with this group of people over here, started by O'Neill, improved by Morales and Catcher, taken to a little bit different direction by Ian Woodward and Ron Brown, improved in many ways and taken to HGSI. Over here, I spent another weekend with John. It's funny, every time I go to one of his seminars, and my wife thinks, "You're going again? You've been on cruise seminars, you've done mentoring, you've read his books, you own his indicators, you hang out in his office. What else can you learn?" Darn if I didn't learn something else or refocused a little bit of what my thoughts were about a couple of things that he does. Van Tharp, one of the experts on position size and money management. George Lee, my buddy from Canada, who I get to share the podium with frequently. And then the newest guy, Guy Cohen, he has a number of sites, including flagtrader.com. It's probably, as it sits today, probably would be more attractive, I think, to some of the, not necessarily newbies, but some of the folks that are looking for something that's going to help do it for them, such as a great scanning tool looking for stocks that are flagging and telling you which ones are likely to go higher based upon his proprietary indicator OVI. I incorporate it into my trading. I screen a lot by OVI, making sure that I'm not buying something where the institutions are selling. And I refer you to his books and his websites for more information. What I need in my desert isle besides high-speed internet, well, I got to have TradeStation or Thinkorswim. I was in Vegas, which I guess is a desert island, kind of, sort of, and I was staying at the Palazzo, where the internet sucked so bad I couldn't even use TradeStation. Interestingly, the Luxor, which is a lot less expensive hotel, trades the internet was much faster. So I suffered for a couple of days. You can see some of the programs I like. You'll see a lot of HGSI tonight. To me, it's still the best tool I have for end of day and delayed intraday analysis of both technicals and fundamentals. Some of the websites I like, including there's Flag Trader. And then a lot of people ask me, what do I use for news during the day? And I probably pay too much, but I use briefing.com's trader service. I find it very useful. Probably overkill on the trader. I could probably back it down, but I find the briefing.com, the combination of their editorialization and commentary as well as their fairly timely news. The website for highgrowthstock.com is here. There's Gil Morales of Morales and Catcher fame, the O'Neill disciples. I apologize for that. Hopefully my wife will pick it up shortly. The key things about the HGSI website, just to point out to you. 1, free 30-day trial. They don't ask for a credit card. And 2, under investment strategies, you'll see a number of names, including mine and Ron Brown. Totally different style of trading between the two of us. We use the same tool. So HGSI is not just about high growth stock investing. It can be many different things. And Ron has really adopted the volume spread analysis and put a lot of tools that you would spend thousands of dollars, usually for companies that come out of England for whatever reason, with the volume spread analysis, and you get it at the same base price for HGSI. Just a quick comment. The first time you boot HGSI, if you're a newbie, you're going to scratch your head. Don't just abort. Email me at hgsidoc@gmail.com. I'll send you some videos that will help you figure out what to do with the software. They're dated, but they still work. And then I have a video and a PowerPoint of one of my live meetings where I kind of teach you the vocabulary. So if I'm losing you, the Eurekas and Phoenixes, Kahunas, Hindenburgs, Bongos, Bingos, Bangos, and all the other crazy names that Ian taught us, feel free to email me at hgsidoc@gmail.com, and I will be more than happy to share that with you. Stock patterns are cyclical, and darn, on Wednesday we're falling off a cliff, and here we are on Thursday and Friday. Is this the start of the next uptrend? Was this just a flash crash, or did we just level off and are about to go back down? I'll make my comments today. I think whatever I say, this is a more risky place in the market than we were a couple weeks ago. Not only does the market behave in a cycle like this, so does each individual stock. And you have to have a sense of where you are because it affects how you go in. And, you know, I may be wrong, and we may be in the beginning of the best bull run of all time. I actually saw some videos over the weekend making that argument. I'm still taking smaller positions. I've still sold some out of the money premium on options to buffer some of the pullback on my own holdings. I've got a bigger cash position. I am still very net long, but I do have some contras in my portfolio now, contra ETFs. I will probably make a decision at 10:30 in the morning of which way to go, and I'll probably close out some of my hedging if I think the market's still going to move up further. To me, there's a lot of uncertainty here, and I don't know what the futures are going to be when I wake up. A couple of more indicators I just want to talk to you because one of them fired on Wednesday. If you are a fan of O'Neill and Cancelam investing and you read How to Make Money in Stocks, you know, a big part of Cancelam and my approach as a top-down investor is knowing when to get into the market. And, you know, in Cancelam, they have something called a follow-through day, which is defined as, you know, stock, you know, after you had a big move up in the market, within so many days, you have more than a 1% move in the market and higher volume than the prior day, and it's called a follow-through day. I'm probably wrong on the definition, but basically that's sort of the time to start loading up in the market. In HGSI, we have the Eureka and the Phoenix. They are similar indicators, and they're designed to show a follow-through day using math. And a Eureka, kind of an excitement, is that emotional exuberance to the upside. That if I'm in a market that's been falling and now it's stabilized, and I see a Eureka or two, I get really excited because I know that market's going higher. In a market that's topping and I start to see phoenixes, I start to worry. So the Hindenburg, which we talked about a couple of weeks ago, is a signal that's related to new highs, new lows, percent new highs, new lows, the moving average of the NYSE weekly, and the McClellan oscillator being above or below zero. And that represents a signal that perhaps the pros are getting out and the amateurs are getting in, and it often signals a top. The Eureka and the Phoenix are calculated totally different. It uses ARMS or Trin index components for the NYSE. So it's got advances decliners, advanced decliner volume ratio. So it's not new high, new lows. It uses the ARMS index. Here's the strong Eureka. We made it a little bit tighter to filter out signals. It's firing too frequently. And you have a similar for the Phoenix. So when you start to see Phoenixes popping up in the market's high, it should tell you that there's becoming increasing pressure to the downside. Speaking of the markets, Friday looked damn good, although, I was sitting in John's meeting and watching my gains for the day erode quite a bit in the last hour. So the market was strong. The market had a great day. La-di-da-di-da. I'm not going to say it didn't, but it definitely had some weakness. Now, it may have been, frankly, just the market participants getting a little bit nervous going into a weekend. And again, the way the market's been going with news, maybe they were just saying, we're going to take it easy and take a little money out of the market and see what happens. And that may be all that it was. Interestingly, notice all the foreign markets that are listed here, which are not exhaustive, are up. And really the only weakness was in biotech. So 2 weeks ago, I said to get out of biotech. Last week, I said to watch it, maybe start to nibble. Cala Therapeutics is one that I've been playing. Had a great week. But big biotech, especially big biotech, still looks very weak, and that's worrisome to me, even though the ASCO abstracts came out. Now, I also told you to look at Insight. Insight was probably the big winner in the ASCO abstracts. Major markets, you can see, again, just to review, this is daily. Upper left, E-minis, NQs, and then YMs in the upper right. Lower left are IWM, so that's going to be not traded 24 hours. It's an ETF, not a future. And then you have the VIX futures, and you have the dollar. So looking at very quickly, the story is the same, at least on the top three. We had a really strong down day on Wednesday, and then we recovered over half of it, or close to, about over half of it on Thursday and Friday. If you look at the Russell, interestingly, it kind of recovered it all as far as the IWM goes, but unlike the others, the Russell is still below the 50-day moving average. The VIX had a one-day wonder and came right back down, although it's still significantly higher than it was. It came up. Doji, low close doji. Let's see if it continues to fall, which would be great for the market, or does it start to step up to higher levels? And the dollar's plummeting. The more Trump gets in trouble, the more the dollar drops. And if you look at the same on the weekly, here's where you can be kind of bullish and not so bearish. All we did on the weekly is we pulled to the 17 weekly and shot back up, closed near the highs of the week or not far off for the week. Same thing on the NASDAQ, same thing on the Dow, and almost the same thing on the Russell. Again, the VIX closing back down and the dollar breaking below long-term or intermediate 50-week support. Just another way of looking at the same thing. You have three rows, daily, weekly, and monthly. I've got the E-minis, the NQs, the TFs. So you do have the Russell futures here, the NYSE, and the YMs. So I start down here and I see on a monthly basis, everything is still in a buy. On a weekly basis, the E-minis went to a buy on 4 weeks ago. They're still in a buy, at least on the algorithms used in Genesis. The same with the NQs, same with the TFs. The NYSE, mostly because energy probably is in a sell. And on a weekly basis, even the YMs are a buy. On a daily, pretty much everything's in a daily sell except the NYSE, as energy recovered, flipped to a daily buy. So I look at that, and I still have pretty much lower left, upper right on the weekly charts and the monthly charts, demonstrating the longer and intermediate term strength that this market's been in, although I think we can all agree that last week, at minimum, there was a shot across the bow of the bulls. A couple of things that I see in the market: rates softening on both the 10 and 30 years, kind of consistent with the dollar. Rates go down. It's not good. I think, when you're below these white lines, which I set somewhat arbitrarily years ago, to me, it's a sign of economic weakness, that there's probably a sweet spot when you get above 2.5% or so, 3% on the longer notes, where the economy is humming and you're not at a point where you're suppressing the economic growth. This fact that we can't even get above those white lines and dropped again signifies to me economic weakness and certainly concern with Trump. AD lines, a little bit of a difference here. This is the small stocks, and the AD lines and the S&P, AD lines on the small stocks, overlined on yellow on the S&P, both pull back the same. Interestingly, in white here, the AD line of the large stocks held up better than price. So a divergence favoring the large stocks, no surprise. We all know that this market is being led by the FANG stocks. Breadth, not much change. You can see where these green dots are. So you're about the middle of the range in both, a little higher than middle on the 200-day, a little bit lower than the middle of the range on 40. This signifies the number of stocks above the 200 on the left and 40 SMA. In times of very strong markets, these numbers approach 80, 90%. They're both in the 50-50 range, if I remember correctly. At least the above the 40 is. And again, sign of breadth. That's not great, but the breadth improved coming into the end of the week. 3-month new high, new low. The yellow marks where it was last week. I commented it was getting down to that level, which it did, where you get reversals, and it shot back up Thursday and Friday. It only matters when you're at extremes. We're in the middle here. Daly McClellan, are we going to see a zero line reject on the oscillator, which would be bearish? Notice we keep failing at the zero line, and we've got, although we have higher lows, we have lower highs. So we're sort of in a, I guess that kind of creates a wedge pattern, but sizably below zero on the daily submission index and on the oscillator. Again, evidence of weakening breadth. And on the weeklies, you see a similar pattern. The buckets, again, going towards some breadth weakness in the market, showing that 67% of the stocks in the S&P 1500 are below the midline in the Bollinger Bands. And as you look at where my buckets are, a clear shift to the red, meaning that more of these stocks are sitting on the lower part of their Bollinger Bands. One would assume that since they kind of go up and down within the Bollinger Bands, that eventually they're going to reverse. That said, I don't count on a reversal on this from this indicator until the number of stocks below the lower Bollinger Band increases. It could reverse anytime and move up, and certainly if the market shows strength Monday and Tuesday, it will. But in settings of a 20 or 30% below the lower Bollinger Band, gives you a great edge in knowing that the market's going up. I mentioned the Hindenburg earlier. We had a series in the Russell 3000. We had one in the NYSE, and nothing occurred in the last week. I continue to monitor that because if I start to see frequent firing in Hindi, I'll know that we're getting near a market top or near a market pullback. The market tone, we had a series of kahunas, strong kahunas. Notice that's a dark red versus this lighter red here. So more than 0.40 change in percent B to the downside across every one of the indexes we monitor. And you notice on the Woody indicator, pretty much, and I think it's the NASDAQ 100, that's left alone, but pretty much everything has gone red to a sell signal. That's worrisome for the market. When I look at sectors, we went from sort of a choppy to now predominantly in sell signals as well. What is holding up the big stocks? So the canaries are the Apple, the Baidu's, the Facebook, the Netflix, the Priceline, the Amazons, and clearly those have been the leaders in the market. It actually pulled back on Wednesday, got back above the 17 on Friday. The weekly bongo stays green. Notice this red line here. This is the Phoenix. So we've now had a couple of Phoenixes occur. One in March and now one in May. So that's concerning, and you know the market has still moved up despite the March. So we'll have to see if these are meaningful. But it does show that there's some underlying weakness in the indexes. Know your news and earnings dates. This is from Barron's. Here's the reference here. As I look through, the dark black is Fed speak. We see quite a bit of that this week. We've got some auctions. We've got new home sales and manufacturing indexes on Tuesday. On Wednesday, mortgage applications, PMI composite flash. We've got petroleum status report. On Thursday, we got jobless claims, natural gas report, Kansas City Fed manufacturing. And on Friday, we have the GDP as well as the Baker Hughes rig count, among others. So fairly news heavy week. On the right, we have a considerable number of earnings. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Some of the ones that matter to me, I made yellow, but there's a lot of stocks that we talk about that are due earnings this week. Market thoughts. We had the worst down day of the year Wednesday, but that did not, as you know, lead to a rout on Thursday and Friday. The dollar breaks through support while the U.S. and 10 and 30-year bonds interest rates slope downward. Market participants continue to wait for the next news to drop. Is it the next tweet? Is it impeachment? Is it Italy elections? Is it repeal of ACA? Is it the angst about infrastructure support and tax relief, and are we getting them? So this is a heavily news. Trump has been in the Middle East, and he actually appeared a little bit more presidential this week because as he was traveling in the Middle East, and that may be something to quiet down some of the naysayers. But despite all this, I did not see a lot of obvious shorts after the market participated so broadly Thursday and Friday. My guess, we still see another leg higher, but we're closer to the end of the bull than the beginning. I'll play more cautious, but still will maintain a net long portfolio until I see a signal to move to short to the sidelines. The Phoenix and the change in market Woody's pattern have got my attention. Tonight's agenda, as usual, let's go ahead on to the charts. Now, I just wanted to show you one quick thing about last week. I know I personally, I'm sure I'm not the only one, had one of my worst days of the week in a long time on Wednesday. And then I ran this analysis and looked at various groups and how they performed. There's no money management in this. There's no long short. It just takes everything in the portfolio and puts $500 in it and sees how that portfolio did over the week. Oh, you read my mind. My wife read my mind and brought me my coffee. Thank you. And so the first thing to notice is it's a sea of red. Big shocker. You find somewhere in here that the S&P 500, despite all the damage, was only down 0.86. Well, the first thing that I want to do is compare myself to the S&P 500, and I was down 0.31. Most of my stocks, 71% were down, but there wasn't a whole lot of damage. Now, truth be told, I had some with damage, but I also had Proofpoint and a couple of other stocks that had a really good week. Weibo, Insight, etc. I look at where the Market Smith growth was at minus 0.78. The IBD 50 at minus 0.91. HGS 100 was further down at minus 1.37. And the big losers were some of the stocks that really, the Bible gap ups of the prior week, the best stocks under 15, turnaround stocks, broken out and running stocks, sprinters. Some of the high growth stocks had a tough week, but on my portfolio, and hopefully yours, was less damaged than you would have thought by Wednesday's underperformance in the market. So if you've been here before, you know I do the same thing every time. I jump into TradeStation. I have my 5-point rule just to get a sense of what the market's doing. I look at 5 different things, and I have 3 time frames. I look at, am I in a buy or sell using the percent PPS buy signal? I'm in a sell on the daily E-minis. I look at the color of the paint bar. That's an elder impulse indicator. When I'm in a sell, but the paint bar is green, it's telling me I'm moving in the right direction. If I'm in a buy and the paint bar turns red, I know I'm in the wrong direction. A green paint bar means, Elder once said, the buying window's open. I can buy or I can short. I can buy or I can hold. I shouldn't be shorting. A red candle with the elder impulse indicator means the selling window's open. I can be shorting or holding. I shouldn't be buying or going long. In blue, I can do what I want to do. So the first 2 things are a mix. We're in a sell signal, but we have a green bar. This little thing is today, so that doesn't count. Third thing I look for are these little dots. These dots may run for days or for weeks, but they signify MACD divergence. And over time, I've had those demonstrate to me decreased market participation and pressure, and typically they precede a pullback or a breakout, depending on if the dots are above or below. We've worked those dots off with this pullback. The fourth thing I'm looking at is where are we within the auto envelope. And I know from years of using this auto envelope is that the indexes and stocks rarely go above or below. And when they do, they come back in rather quickly. So we notice that here we are right in the middle of the envelope. We pulled down to it on Thursday rather. Then we had a reversal and moved up on Friday. So I would say the daily on the E-minis is mixed. If I took away that sell signal, I'd be pretty excited. But right now, at best, I'll say it's mixed. The high jump bar at 49 is not an issue. When it's above 90 in a instrument, I get nervous that it's extended too far. We're still in an intermediate and longer term buy on the E-minis. If we go to the YMs, the Dow futures, not as good in that we have a blue in a sell signal blue, no divergence within the envelope at 38, so a little bit weaker perhaps than the S&Ps in a longer term weekly and monthly buy signal. If I look at the NASDAQs, now these have been the strongest, but even the NASDAQs on Wednesday reverted to a sell signal, are blue, a sell signal occurring well outside the envelope. Its high jump had been up as high as it gets back here. On this, let's see, is that the 16th? It was at 98.81%. That tells me that on this date, May 16th, the stock was more extended than it was 98% of the last 200 bars. Well, when you get to be as extended as you've been, you typically pull back in. So that's why I monitor that. It's come back nicely. Longer term, look, it's been in a buy signal since the election on the weekly, long-term buy signal on the monthly. It does have the little red dots here. So the NASDAQ, not as strong as it was, but it's worked off some of its overboughtness. And lastly, the Russell futures, in a longer-term sell signal, bounced off the envelope here, turned blue, 23%. So these are weak as well, or weaker than the S&Ps. In a weekly sell signal, that's also different. So not everything is acting the same, and as I look at this, I don't feel a whole lot of bullish exuberance. If I want to look at the dollar, it's actually up tonight. You'll see a little green bar probably somewhere. I guess you won't see it because it's an impulse indicator. Notice these green dots. That's telling you that the dollar is getting oversold and that it has some MACD divergence, or John would call it convergence, saying that you've got pressure pushing the dollar up. It's as low as it gets on the high jump bar at 0.00. Sell signal in red, sell signal, sell signal. The dollar couldn't be any uglier. And when I start to see those green dots, maybe the dollar is going to bounce soon. Dollar's ugly and weak. The crazy thing is you'd expect gold to be super strong, and it's in a buy signal. Well, we'll look at it on some of the other charts, and it's still in a weekly sell signal, and it recently went monthly buy signal. So gold is sort of in the middle, certainly looks stronger than most of the things we showed you thus far. Certainly the weak dollar helps that. And then the VIX. VIX ran up, had a reversal here and pulled back. Still elevated compared to where it was. Remains to be seen. So my assessment here is the Russell looks the weakest. I already knew that. I don't see a whole lot of jumping up and down strength in the market that makes me feel extra bullish. But I do like the fact that the NASDAQ has worked off its overbought and MACD, so the divergences are improved. All right, so the next thing that I do is I now go into HGSI and yeah, I'll come back to TradeStation. I wanted to show you something in TradeStation. I go into my warehouse view, and I'm going to go into Woodward and Brown user groups, major markets plus top-down view. So this is only price and volume. 1 day is the majority, some for 5 days, and just a little bit for 3 weeks as far as influence. And what do I see? It's not good when the Russell 2000 and the NASDAQ 100 and biotech are bouncing off the bottom as the weakest groups. And the strongest groups are gold, gasoline, commodities, and oil, silver, bonds. So clearly there was damage to the major indexes this week. If we look at 5-day performance, the VIX was up 15.8% over 5 days. Actually, it was down 17% on Friday. That means it was up about a third. Over 5 days, small caps were down 1.2%. Dollar was down 2%, Russell was down 1.1%, biotech was down 0.8%, NASDAQ 0.6%, here's that S&P 0.4%, it was 0.37% the other way. And you can see none of the indexes really were positive. NYSE was flat, probably with the improvement in energy. You know, I like to look at several of these. Sorry about that. So about the S&P 500, and let's go down to my simple view here. For those that are new, let me just review. Up here, I have a buy-sell signal that I developed with a couple of other friends called the bongo. I like to be long when the weekly bongo is green. I have to be careful when the weekly bongo is red. The weekly bongo will be late to enter, but it will capture the majority of a move. I use it as a filter. I also look for daily bongo to go red when the weekly bongo is green, because that might be a pullback in an uptrend, which is some of my favorite things to buy. I like to look at the Hindenburg-Omen. I have 2 different measurements because of some variation in what is in the index. And you can see since November, we've had it fire 3. I do this every week, so you're probably tired of it. But if I go back to 2007, you could see what happened here. You had a couple of them, a series. You had a very hard market sell-off. Market got back up to old highs before the end of 2007. And then they got whack-a-mole down, and now you know you're in trouble. And so, to me, they're important. We haven't seen a series of them for a long time because the market was beaten down. We're getting to that point where they're probably more relevant. As I look at the S&P 500, I notice the Phoenix here, which is calculated on the NYSE and will be seen on every chart. Excuse me, that's a kahuna. My bad. There's no Phoenix on this chart. The kahuna, dark red is a percent B change greater than that 0.4 to the downside. That's a big move on a single day. And this is a day where it looked bad, where it took out the 50-day moving average in blue and got very close. Did trade intraday on Friday above the high of the day on Wednesday. Still hasn't closed the gap. This was a bear kicker here where the market closed, gapped up. Remember, it opened up here, closed down here on Tuesday, followed by a big down day on Wednesday. If you go back, you can find a number of these in the market, and they don't always end well. So that's one concern you might want to have if you're bullish. But if I just look at where we're sitting, I've got to get back above that 8 and 17 days soon. But I'm sitting above the 50. My weekly bond goes green. I still can feel somewhat bullish there. I take a look at the Dow. Weekly bond goes green, looks just like the S&P. It's just not as much up. Again, getting close to the top of where we were on Wednesday. There's the kahuna. Everything had a kahuna to the downside on Wednesday. Not much else to say. If I look at the NASDAQ, which had been way outperforming, especially the NASDAQ 100, you can see the NASDAQ had a big gap down on Wednesday, never made it to the 50. And look at how this 50-day moving average, 1, 2, not here, 3, 4, 5, 6 times the 50-day is held. So pulling back to the 50 is not always the end of a move. We're already bouncing up. We didn't get back to the 50. I'm not very bearish at this chart either. Still need more information. And then lastly, the Russell 2000. The weakest of the bunch has really been going sideways. In fact, you could argue we've sort of been in a rather big box. We've been in sort of a Darvis box range since December on the Russell 2000, and we're right in the middle of it right now. So I don't think these look horrible. They don't look like they're definitely going to roll over. Certainly, we've been topping for some time, as I've said several times. That topping is a process, while bottoming can be an event. But we're sideways, and sideways is sideways. If I look at the dollar, you'll see what it looks like to be down. The dollar is just broken down horribly. In fact, if I just look at, I was looking at some boxes there as well. If I just look at the dollar from its high to where it closed, the dollar is down 6.5% in 95 days. I think that's a pretty big move in the dollar. And after Trump was talking about how he's a strong dollar guy, that's not a strong dollar. So you expect gold to have gone crazy. Has it? Well, that's a lot better. Got above the 200. It's still in a weekly bongo red. It did have a kahuna to the upside, which is bullish. So maybe the gold's gonna work this time. Now you could certainly look at this, and if you want to be an optimist, and frankly, I'm an optimist, and I'm not a great drawer though. You could sort of look and say, hey, we're in an uptrend here, guys, and and we can give us some more data here. Maybe we are. We're still struggling at the 200. The weekly bond being red, I find bothersome. I think the dollar, to me, is much more interesting here than it was down here. And it may turn out to be that this was a great buying opportunity down here. So I may start to look at the dollar, at gold, rather. I'm not talking dollar. But look at this. Is that bullish? I don't think so. It doesn't want me to go out and buy it. And then how about JNUG? That was Nugget, and here's JNUG. Maybe the dollar will drive these things higher. I mean, the gold pickup may drive these higher, but right now gold, I'm not a big gold fan right now. I haven't been a gold fan for a long time. As I said, I have to be a little bit more careful and pay a little bit more attention to it here. But when I look at it in different ways, I'm not sure that I buy that gold is different this time. What about gold miners? They'd have been stronger. Not really. Gold miners, lower highs, lower lows, still in a downtrend. Silver, same thing. Is it making a comeback, or is this just a bounce? It's still way deep in the pattern with a red weekly bongo. And then the VIX. Notice that it went It's still red here. It had a little period of green. It didn't even turn this week on the weekly. The daily did go. Quick run up, topped, and came back down. As we've talked about many times, when the VIX is flat and doing nothing, I do very well in the stock market. When the VIX starts to move up is when my portfolio suffers. And when the VIX starts to drop is when my portfolio goes up. It went up and down very quickly. Now, I did buy, and I'll probably regret it, but I bought some VIX options. I didn't pay much for these. I mean, I think, hell, we can look at what exactly. I got them. I think they're like 45 cents, and I bought a hedge, and I will get out of them early in the week of the market. So, I bought 150 contracts, down 6 cents. So I paid 35 cents or 40 cents a contract. That was my hedge, and that's at a VIX, a VXS 15 call. It's at 14.49. If the VXX moves up because of volatility in the next 5 days, I can make some decent money on this because I have a lot of them. But I bought it purely as a hedge, and they were cheap. And the reason why I don't recommend you buying these unless you really know what you're doing is this chart. If I go all the way to the left, I see the VXX futures here were $30,680 in February of 2009, and now they are in May of 2017. They are about 13. Well, we know they're 15 when I bought them, 14.90. How do you go from 30,600 to 14.90? You have a ton of reverse splits and you lose value. These are not great investment vehicles. To me, they are short-term insurance policies. All right. After I've made my assessment about what I think the market is doing, then I go in, I look back into warehouse, and I'll go into 07 in the major Woodward user groups. And I have 172 different industry groups. And I want to look at momentum, so I'm going to look at price and volume. Force index is today's price minus yesterday's price times volume plotted, and I take a 2-day and a 13-day exponential. So to me, a 2-day force is a great thing to rank because it looks at price and volume over a short period of time. So let's look at a ranking based upon the 2-day force, and I could see I'm up to 68 groups to the upside. I can tell you on the 2-day down, think about how strong Thursday and Friday were. I've only got 2 groups to the downside, biotech and internet-based services. Very quickly, biotech. The reason why I've been sort of down on biotech has been the fact that, I don't want to hurt myself here, let's see. That these are a lot of small biotechs, but I want to pull up specifically. Well, we'll start with Bluebird. If I was finding a stock to potentially short, if I did such a thing, Bluebird, you can see it's in 15, it was high as 190 a share. They have, I believe, some technology, gene therapy technology. I've got a weekly red bongo that's new. I've broken down below the 50 with a big bar and a kahuna to the downside. And I am going to, and I got another comment to make because the Eurekas have disappeared. That's interesting. I saw Eureka intraday. Maybe there wasn't a Eureka. But now what I want to do on this is I want to, what do I want to show you? I'm going to go into my weekly chart. This is my shorting chart. And what I look for are stocks that have a new kahuna, trade below this blue line. Let me open this up here, which is the 21-day moving average. And then on the 19th, we are 2% above it. And then the relative strength of the stock breaks below its moving average. And this is a ratio of the stock moving average versus the S&P 500. And when the red, which represents the comparative, breaks below its moving average, which is the purple, I get my short pen out, and Bluebird has triggered for me, which is my favorite shorting pattern. So that's one of the ones that I will potentially short if there's market weakness. Exelixis has been a big mover, similar pattern, sort of a sandwich here, but broken down. Got a kahuna to the downside, pocket pivot to the downside. It's been in a red weekly bongo for a couple of weeks now. Regeneron is a big one. I don't short at all-time high or at highs. I'd rather see it break down some. Or at least I need more information here before I short this, but I'm going to be watching that one. Agios, it's got to break down below the 200. That looks weak as well. But what really had me worried about biotech is Celgene. Target 200-day moving average really broke down hard. Gilead, whoops, not gold. It's at a multi-year low. And Biogen IDEC broke down Alexion. What I think is unbelievable is that the NASDAQ 100 is holding up as well as it can with biotech in the toilet. So be careful with biotech. There's a lot of biotechs that I like. I'll show you a couple of them. Internet-based services. Shopify has been a big winner, rolled over some end of week, but still above its 17-day moving average. Weekly bond goes green, probably just a shallow pullback. Make My Trip Limited has broken down below the 50-day moving average. Grubhub still up near its highs. So that's where the weakness is. So that tells me that we've got a very strong market when that's the only things that are weak. So let's just take a look at what's here. Oil, energy. So we got 1, 2, 3, 3 in the top 9, or 3 in the top 8. 4 in the top 24. So we've got a lot of energy up top here. So energy is strong, has been strong in a long time. What else is surprising up here? REITs are back in despite low interest rates. Perhaps they become attractive as a, or they probably become attractive because they pay a dividend when I can't make any money in the bank. Plus it's cheaper for them to borrow, so maybe not despite, maybe because of low interest rates. Steel and raw materials and steel producers. Wow, that's different. And banks are making their way. So is there some, and then you have your semiconductors, can't forget about them. Is there some market rotation here? I don't know, but we're bringing back some of the things that have been beaten up. Very quickly, exploration and production. I only usually look at the things that are above the index, and the index is right up top. So that would bother me some. So very quickly, let's just look at a couple. Whiting broke above the 50, still in a weekly bongo red, had a deep kahuna. You can see the index of the group is high. You know, you got to get through that 200-day moving average, low in the pattern. Chesapeake looks like Whiting. Anadarko, very low in the pattern. Pioneer looks like Whiting, pullback, kahuna, pocket pivot. These are all stocks that are beaten down. Eventually, they're going to go up. ConocoPhillips looks a little bit better. It's above the 50. Pays a 2.2% dividend. So I look at these exploration and production. I know there's supposed to be more cuts announced this week. Energen looks pretty good. Great earnings per share growth rates. Broke above its moving averages. Weekly bongo turned green. For the most part, these stocks look weak, but they're coming off bottoms. And when I see that and they move to number one on the group, this is something that you probably need to be looking at. Oil and gas services. Again, if oil prices go up, do you see improvement here? Down low in the pattern, right below the 50, but it had two kahunas this week. Pocket pivots galore. Coming out of a squeeze is Halliburton. Yeah, I'd rather buy it when it got above 50 because I think it's going to keep running its head against that. Look at the earnings per share coming in. If rig count increases and oil prices stay up, Halliburton might be a good place to put some money. Neighbors deep in the pattern, but did have a kahuna. Helmerich and Payne. I've also been interested in Baker Hughes, which did a deal with GE in a squeeze here right below the 50, did have a kahuna as well, 1.2% dividend. Application software. What a day Autodesk had. Whew. Great day on earnings and actually traded sideways after gapping up the entire day, didn't give up a penny. Autodesk, if you like it, I hope you've read Morales and Catcher and taken their direction as to how to manage a buyable gap, because that's what this light, green light there means. It's a buyable gap up. Athena Health had some, I don't think it was activist investors, as well as some investors coming out talking about it. Big gap up Thursday. PTC Inc., don't know what they do. Let's see. Enterprise Solutions, Desktop Solutions, MathCAD. So it's kind of like Autodesk. Perhaps it went up on sympathy of Autodesk. PTC Inc. Coming, let's go back here. Good earnings per share growth coming in. Sitting on the 50, had a kahuna. Interesting place to look at buying something. Momo is one of my favorite stocks I own right now. Been in a huge uptrend. This stock really was, you had a kahuna here, you broke above the 50, you retested, and now you've been running up the 17-day moving average. This has been a big winner for many of us. Please note it has earnings this week on the 23rd. Workaday's earnings are on June 1st, is trading at a multi-month high as well. 52-week high is 99.48. It's currently trading at 97.82. It set its 52-week high on Friday. So those look interesting. Telecom carriers. I wonder how much of this isn't dividends. Sprint doesn't pay a dividend. There's some M&A potential there and consolidation. Sideways chart, I don't find it that exciting, to be honest. AT&T, if I bought it, I'd be buying it for the dividend. Every time it pulls back, you got a yield of 5%. It makes money, sort of the big kahuna in the industry. Verizon, similar pattern, 5.1%. T-Mobile's got the best chart pattern. Perhaps them and Sprint may have something to say about the big two, and maybe they come together. Right below the PSAR. Been a nice move. It makes money, good earnings per share growth, does not pay a dividend. So T-Mobile looks the most interesting to me. And then I've been in and out of CenturyLink, which frankly I got mesmerized by their dividend, 8.7%, but I like to see it get back above the 200-day moving average. So maybe the story here is dividends, because telecom and REITs. Now you got to be careful what REITs. Simon owns shopping centers, so here's a stock bouncing off the bottom. I wonder about the viability of shopping centers, but to be honest, I don't know about the debt. I don't know, if I'm a big box retailer like Macy's and I pull out, am I responsible for somebody else to come in there, and does it cost me money until it's filled? If that's the case, then maybe these REITs are less at risk than I would have thought. They pay a 4.4% dividend. Obviously, these ones that own retail, I think this one does too. Retail property, they've been hammered. They've showed up here because, remember, it's price and volume. Their price has moved up over the last couple of days, and this guy trades 11 million shares a day, 3.8% dividend. Crown Castle, this is wireless towers, nice uptrend, pays a 3.8% dividend, great earnings per share growth rate. And Kimco Realty, Looks like they must do shopping centers too. Yep, neighborhood and community shopping centers bouncing off the bottom. I personally am not interested in owning shopping centers right now, but that's when I let my fundamentals get in the way of my charts. Power generation, Dynegy, big gap up on Friday. So if I might want to know why, I might right click on my mouse, more info from the web, go to FinViz and watch. Magically it'll bring up Dynegy. Buyout approach. So you've got Calpine and Dynegy in potential M&A activity. That's why this group is moving. NRG has been a nice chart for a long time. Pull back hard, pays a 0.8%, hardly any dividend. But utilities like low interest rates as well. I was surprised about this, that the steel and raw metals, these were great Trump stocks after the election. You can see the move. And then from February 10th on, the Trump stocks have not performed. Nice bounce here on Friday. Still red on the weekly bongo, pays a 4% dividend. Now, Rio is in New Zealand, Australia, South Africa, Europe, and Canada. Cliffs is in Cleveland. Not a beautiful chart by any means. It certainly looks like it'd be putting in a bottom, and maybe you'll have some momentum coming in. Look at the earnings per share growth. It doesn't pay a dividend. Look at the demand supply. I don't talk much about it, but because typically it's not helpful, but 5.5, there's a lot of demand for this. BHP Billiton, pretty chart, uptrend, pullback, sitting on it with the, I don't know, can't believe it's not a squeeze. Remember, the squeeze is a Bollinger Band contraction within a Keltner channel, not moving averages coming together. But within a couple bucks, you've got a 50, a 200, and a 17 simple, and 8-day exponential. Stock price broke above those with pocket pivots. The weekly bongo still down for now, probably not for long. This chart's beautiful, 4.4% dividend. I don't know if this is gold that's driving this higher and silver, if it's the dollar being cheap. All I know is these things look darn good. Of course, the one that I own hasn't shown up there. Let's just see what Techminco looked like. Looks about the same, pays a nominal dividend. All right, back. Midstream oil and gas, another interest rate sensitive group. Look at a couple of these. I think one of these made my list. So you have sideways trending up pattern. Didn't do much on Friday, but you had a Bible gap up. Squeeze. You can't see much, but it had a Bible gap up. Mobile breakout, recent squeeze, bongo flipped, kahuna, and pays a 5.9% dividend and has good earnings per share growth. That looks great. I'd have to learn more about the company. Cheniere, also a nice day on Friday, pays no dividend, so we'd skip that one. One okay. Down in its pattern here, red weekly bongo, but pays 4.8%. I own ETE, and you could see it's pretty much sideways, paying you a 6.1% dividend while it's going nowhere. And Targa's down there. So what else do we got? Base metals. We talked a little bit about gold and silver. What about copper? Freeport McMoran looks a lot like Cleveland Cliff. Had a couple of nice days on Thursday and Friday. Reversal day. Island reversal. Morningstar, whatever you want to call it. Still red up there. Good earnings per share gap. Growth, does not pay a dividend. Might be worth watching. Seems like it wants to go higher. Aluminum has been doing better. As you can see, it's moved off from 11 up to close to 14. This is Century Aluminum. Good earnings per share growth. And last in the top 10, internet media. I own a bunch of these. Baidu, one of my, in the leaders index that I follow, sort of loosey-goosey here. Earnings are out. Had a kahuna, Mobo breakout. Too loose probably for me to take a position right now. Facebook, Facebook looks interesting when you go to a weekly, and I should probably look at more weekly charts. I mean, is that not tight? Lower left, upper right, and just a beautiful thing to be seen? How could you not be long Facebook? I mean, obviously, when everybody has moved long Facebook, there'll be no one left to buy it, and there'll be an opportunity to lose money being long Facebook. It held at its 50 on the Wednesday pullback. It's now above where it opened on Wednesday on the big sell-off. The weekly bongo has not changed, does not pay a dividend. PEs and growth rates look about the same. I'm long Facebook, but one of these days I'm going to have to ignore that weekly chart and lighten up. I've been long for a long time. Weibo, this is one of the reasons why I had a great week this week. Popped on earnings. Chinese internet play. Notice the weekly bongo turned green back up here. Lots of pocket pivots. It did have a Mobo break, a kahuna, and then a little reversal, but moved up the next 2 days. Weibo continues to look good to me. Cena's in the same group, also looks very strong. Then we get the Googles. What's not to love? And Yandex, the Russian Google. Looks just like I didn't change anything. So this remains a very strong group. Just for poops and shits and grins, let's see what else we got down here, and then I'm going to turn it off. Steel producers, it's kind of strange. These guys have been beaten up hard, but they made it to number 11. Kind of like that Freeport McMoran, Cleveland Cliffs. Is this a bottoming position? Is this a morning star? Great earnings per share growth, pays a small dividend. Look at the demand here. Huge demand. Really huge demand. And diversified banks. This is interesting because you could look at Citi, Bank of America, JP Morgan, and if you do this the right way, you could see a shoulder, a head, and a shoulder, and we got a reverse head and shoulders. That would be exciting. And you also are breaking down. You've been in a weekly bongo for some time. Banks are getting better, but they're not going to move until interest rates move up or we see more work out of Washington on regulatory reform. So we looked at groups, the upside and downside. I do want to mention what I did this weekend. I was at John Person's meeting, and I have a lot of indicators, but I find that during the day, on the weekend, that his indicators, specifically the PPS buy and sell signals, which are included at no cost in Thinkorswim, or it's a cost to Thinkorswim, but they give them to us for free. But I use a lot of the different things from him, and high closed dojis, low closed dojis. And if you have interest, if you don't have his package, if I can get enough interest, I could always go to Mary and try and get some type of a special, as I've gotten in the past. But it takes a village. It takes more than one or two people to show interest. But I find his scans to be a difference maker for me. As everybody knows, I like to find stocks in an uptrend, so weekly buy, pull back to support, and now have a new buy signal. That's what, for example, a buy two. And I could look at some of the stocks in buy two, and I haven't prepped it, but let's look at DHI. Here's a stock that's clearly in an uptrend. DH Horton, a home builder, pull back to support here, these gold bars, and pull back to, frankly, it's moving average. It's a trend line that's automatically written for me in TradeStation. Had a buy signal here, weekly buy signal, and the scanners are great for helping find stocks intraday. End of day. And then intraday, the radar screen, this is why you have TradeStation, if you have it, is the ability to scan large number of stocks, looking for new signals, whether they're PPS buy-sell signals or HCD LCDs, looking at trend coming into the day. So, for example, ETE says here was a downtrend, but on Friday had a new high closed doji. So let's just go look at that. So I'm monitoring that on a separate monitor during the day. So let's just go ETE. So here's a stock that I had a high close doji on Friday. Stock's been in a downtrend, and I'd be looking now for a reversal with that high close doji. So I find his tools extremely useful. I can't do them justice. I just came from a seminar with him. It was just a fantastic seminar. I highly recommend him. And as I said, if anybody has interest in learning more about that or potentially picking up his indicator package, again, as I've always said, I don't get paid for promoting things like this. I do it to help him, but to also help you. Just let me know. Let me see if I have his handout. He just did a great seminar in Vegas, and we'll be doing one together after Thanksgiving in the end of November. I think the way it falls, the last weekend in November rolls into the beginning of December, and I will be doing an HGSI one-day seminar on Friday, and John will be doing a Saturday and Sunday and Monday seminar. You'd like to imagine if your kid generated a $7,000 cell phone bill traveling in Europe. Fortunately, he's a good talker, and I think he got us out of it. I was just looking for John's presentation, if I have it, just to show you some of the things he discussed. I don't see it, so it's on a different computer. But anyways, there'll be more about that to follow. So lastly, let's just look at my buy watch list from this week. As I said in the beginning, I expected to see a lot of shorts, and I found some shorts to take. I showed you one or two in the biotech, but what I really found was a lot of interesting stocks. Last week, I think I called out and said Insight looked interesting to me because it was beaten up and it had abstracts coming from ASCO. It doesn't look like much here, but 1, 2, 3, 4, 5. Had you bought at the open Monday and sold it on Friday, Insight, and imagine if you're playing options. I'm going to bite my tongue and not say anything else about options because I don't want to take responsibility. 3, 4, 5. If you bought at the close of the day on let's see, Friday, Thursday, Wednesday, Tuesday, Monday. If you bought it at the open Monday and are still holding it, Insight in 5 days was up 13.8%. It was a huge move based upon its ASCO abstracts, which I was kind of counting on when they came out on Thursday. Or I think they came out Wednesday. So Insight I still like. We looked at many of these. Amazon, it's kind of like Facebook. Put this on a weekly chart. Tell me what's not to love. Yeah, you got to live with some pretty tough drawdowns, as I have. It's one of my larger positions. Amazon still looks great. When you get to be 950, whatever, what did it close at on Friday? 959. It's going to 1,000. I'm in it, but I'm going to have to start thinking about some protection if this market rolls over. Amazon looks good. What else do I have in here? We showed you Freeport McMoran, Boeing. There's going to be some big defense coming out of Trump's visit in Saudi Arabia. Boeing uptrend, pull back on some concerns about the 737 MAX. Had a great day on Friday. Never changed the last couple of weeks on its bongo. Pays a 3% dividend. I saw a number of other interesting looking defense stocks this week as well. HD Supply, this is a stock that is one of my get on a plane trades, in that I could look at this right now and say, I like this, pull back to the 50, had a couple of kahunas, mobile breakout from a squeeze. I'll give it a pass on the red weekly bongo, although it's a concern. And if I was going on a plane tomorrow, which I'm not, what I could do is, let me get my tools. All right, let's put my highlight there. And let me draw my drawing tools up. It closed at 41.89. So I might put in a buy order at, say, 42. Let me see. I'm not saying I would yet. I'm going to look. And where would I put my stop? I'd probably put my stop, depends how aggressive I want to be. As long as it stays above the 50, I'm happy. So I could put my stop in here somewhere in the 40 range, in which case I'm risking about percent on the trade. That might be okay. Let me try that again. So that might be a reasonable. If I was more concerned, I might bring it down here, but now I'm risking closer to 10%. But the way I do these trades, frankly, is if I'm traveling and I like the stock, I put a buy if you hit my price, immediately put my stop in. And then the way I manage it is I probably look at this chart. See, I'm at a target about 44, 45. So let's say I take this stop. So there's about $2 here. I guess I can't free draw with this. So let's say that there's a $2 risk. I'll take my first profit, $2 over my buying price. So I'll take half off when I hit target 1. I'll bring my stop to break even. And then when I'm up 10%, I'll move my stop to a trailing stop and trail it higher. There's different things that I do. The key is I look at a defined target and stop. I take a part of my position off at that first target. Yes, I learned that from John and others. And then I go to a trailing stop. First I go to a stop set by the chart, then a break-even stop, and then a trailing stop. And I'll try and get as much as I can out of a trade. Let's go back and see if there's anything else I wanted to point out. I noticed there are a lot of housing stocks this week. So I saw a lot of home builders. Showed you DHI and TradeStation. Sitting on the 50, bunch of kahunas, mobile breakout from a squeeze, and the weekly bond goes green. What's not to love if you trade my style? That's a great looking chart. PE and growth rates are about the same. Semiconductors still show some strength there. Specialty chemicals look strong. One that's been awesome this year has been Chemours. Another one of these, stick a weekly chart and just wish you owned it. What a great move this has been. Still got great earnings per share growth compared to its multiple. I like this one still. And then the other thing I wanted to show you, I could show you a lot of things, but then I'd be here all night and you would never stay to the end. So, is there anything else I wanted to show you? Oh yeah, the one healthcare. There's two healthcare stocks I'm looking at. One I already own, which is Cala. You know, is this a cup handle breakout? It kind of looks that way, doesn't it? A big move, doesn't make money yet in the specialty pharma space. I stick a weekly chart on it just to take a look at it. This used to be a $30 stock. It certainly broke out here. Looks like it wants to go higher. I like this one a lot. And I'm going to snoop around this guy, Corcept Therapeutics. Not as clean a pattern, but a similar cup and handle and breakout. This one actually makes money. So on that note, you know, there are a lot of things to like. I did see some things I'm interested in shorting. I've got to change that picture. There's that Bluebird Bio. It was one of them. Valspar. Kind of going, I think this one's a takeout, so I'm going to have to look into that. But the other one, Esperion, here's another biotech, kind of like Bluebird breaking down. So I'm looking at longs and shorts this week. I hope you have a great week. Futures are still up a little bit. And again, I expected this to be doom and gloom. But as I looked at charts, I still have a lot of charts to buy, more to buy than to sell. Y'all have a great week. Good night. Thanks, everybody. And let me know, again, just to review the things that I mentioned before the end. So let me just make my font bigger here. And hold on a second. Here's a couple of take-homes. One, email me at HGSI doc@gmail.com for 6-pack of instruction videos for HGSI, for a PowerPoint and video of vocabulary, contact me at above for interest in a group coming together to purchase indicators at a volume discount. There's no guarantee I can get that from John and Mary, but I have in the past when I've done my live meetings, and I would like to do that and spend a couple of webinars live with the folks that do that to show how I marry HGSI and John's stuff together. And most of all, trade safe, not often. Have a great week, everybody, and we'll see you soon. Thanks. Oh, yeah, one more thing. Late November, South Florida, HGSI doc seminar, followed by John Person seminar. More info next week. Good night.